Well, we have a big audience this morning. I'm going to respect your time, so I'm going to start now. I see Valerie's on. You have your mic muted, but you could unmute for a second and say hello.
Hello, I'm in the car, so I just don't have my that's why I muted.
Turn your camera on forward looking so we could backseat drive as a group. Wouldn't that be great?
Yeah, that would be good.
Yeah, that would be really cool. It would be like having Siri in a choir, you know? I'm going to build on a couple of items that we talked about yesterday with the Alpha Lions, because they were so good that I thought we would share today. So while we are in a private group right now, which we are, the stage, the platform, the microphone is open. Who wants to go? Who has a question? Who would like an answer to your $1 million question so you can go ahead and make $1 million today?
We'll answer that. How? How do we make $1 million today?
You start with 2 million, put it in the market.
Right.
No, I'm kidding. I'm kidding. I only said that because Jeff Allen's not on yet.
That's hilarious.
Jeff may be joining us, but he's up in a wooded area, so he'll have probably very poor Wi-Fi, so he may or may not get on.
Joe, is one of the items on your review today regarding the, what is it, RGI? I forget the terminology. I'm sorry. Why does it look like I have jaundice? My screen looks yellow.
Oh, wow. That's a personal problem.
Yeah, I guess I have.
You need an incubator.
I don't.
Yeah.
I'm not following you with the.
Okay. So specifically, my question is, and if you're already reviewing it, that's okay, or if you don't want to do it, that's okay. But the idea of adding 6 or 7 additional $50,000 add-on mini policies to an existing policy, et cetera, et cetera. I'm just curious that what that additional rider costs. Can I add it on existing? I mean, give me like the deets on, for this amount, you can add it on and.
Yeah, we can do that offline.
Okay, perfect.
But I did send all of you a screenshot yesterday of a rider. And I mentioned that they actually give you 7 options, which I thought was cool. And one of the questions I have is, I don't know if that number of options is expanded or reduced based on how old the child is when you put the policy on them. I know that the maximum amount of options is 7, but I know for a fact that I've sold policies where there were only 6 options, including that rider, and maybe Emeritus has changed it since then. But let's just go with what we have now, which is we've got 7 options starting at age 22 in Emeritus's case and ending at age 40. The cost is meaningless. It's a few bucks. I think it might be $20 for the year, per year in rider. So it's insignificant. Was that your question?
Yes, awesome. Thank you.
Yeah. Yeah, I don't see any reason why a parent wouldn't add that rider to guarantee their child insurability in the future, right? Because if life insurance is a good savings vehicle and a safe savings and a protection device and a repository for for safe money, why wouldn't you want to give your kid the option to have 7 more of them as they get older? So back in the day, when I wrote my policy on Alex, when she was 4 or 5 months, I was a little bit slow in the uptake. I should have wrote it when she was a month old. But when she was 4, 5, 6 months, I wrote her the policy with Mass Mutual. That was my primary carrier. And now when you go to exercise the options, you don't get any riders. So they won't give you a PUA rider, for example, unless you provide medical evidence. Now that's Mass Mutual. Another carrier might add it with minimal or no evidence. It all depends on the carrier. So in my case, with Mass Mutual, when Alex's first option came up, I said, well, I want to buy her the highest cost per 1,000 policy, right? Because a PUA rider wasn't available because her insurability was compromised by that point. And so the best policy with the highest cost per 1,000 was 10-pay. So, a $50,000 face amount 10-pay on a 25-year-old is like $1,000 a year. So every option that comes up, we buy those, and as a matter of practicality, 10 years after her last option arises, all of those 7 policies will be paid up. It's not the ideal, because I really would have preferred to keep on loading up the PUAs, but we didn't have that availability. Does that make sense? Is there anything else come to mind out of that? Is that a no? Mike?
No, that makes sense. Thank you for the explanation.
There's also a term rider, a child's term rider that you can add onto a parent's policy when you're writing the policy. And whether they have 1 child or 10 children, the rider costs the same. They don't charge it per child. And it's just completely stupid not to include that if you have kids. The rider might cost, depending on the parent's age, the insured's age, it might be $10 or $15 a month to insure all your kids for, and somebody else will have to correct me on this. It might be a $10,000 rider. It might be.
6 kids up to 25,000, Joe.
I didn't hear the beginning of that.
Only 6 kids up to 25,000 each.
Only 6 kids. What if you have 8 kids?
I guess too bad for you.
Well, I mean, that's something worth following up. But once the child turns 25, they have the option to convert that, because it's a term policy. They have the option to convert that policy at a multiple of the term. I don't think it's 1x. I think it's more than 1x. Valerie, do you know?
5 times.
Cool. So if it's 25, then you're getting $125,000 policy, which it's minimal, but it's better than a poke in the eye with a sharp stick. And I see Jeff Allen's name. I'm not gonna call him on the carpet until he's ready.
Fire away, Joe.
Good morning. How are you doing?
I'm doing good. Caught a bunch of fish this morning. Now I'm ready to work.
What kind of fish did you catch?
We went and got a bunch of catfish for a fish fry tonight.
Oh man, that is so cool. And what part of the country are you in?
Kentucky, very western part of Kentucky, land between the lakes. People have heard of the National Wildlife Refuge, land between the lakes, where I'm at. Got buffalo and elk. Beautiful.
Oh man, You're making Mike Stevens jealous. Although
And we have
Mike-
green trees, Joe.
You have what?
Trees that have green leaves.
Yeah, leaves. Yeah.
Leaves, yeah. Not prickly cactuses, but real leaves.
Most of the time in Las Vegas, when you see a big, tall green tree, it's actually a radio antenna, disguised, very poorly disguised to look like an evergreen. And then we have a bunch of evergreens, and then we have imported foliage of all kinds. Some years ago, you'll enjoy this because it's not your city. Some years ago, we imported a bunch of palm trees, and there were rats in the shipment. So some homeowners have had the luxury of, or the pleasant experience of having to go live in a hotel for a couple of weeks while
That's terrible.
they had their house de-ratted, whatever you call it. So let's talk about news and views. I thought I'd before I leave Jeff, I don't want to I want to honor your time because I don't want to interfere with your camping out and looking under the great blue sky and enjoying nature. So I am curious as to what your take is on what's going on in the market, and you can answer that, in any fashion or form that you like.
With all kind of disclosures first, right?
No, I don't. I'm not big on disclosures.
No. Well, I mean, I always tell people I never make predictions. I just follow the trends of the market. But we're most definitely see
Okay. Hey, Jeff, I'm gonna.
cracks from this rally that we had off of the bottom from the first week of April, which I mean, starting.
You're not working. Your audio's not working.
Yeah, I have very poor reception.
Okay. So what we're gonna do is we're gonna postpone, and we'll set a separate meeting when you're in civilization. I'm totally jealous. I'd rather be where you are
Okay.
than sitting in the city where it's going to be 109 today. So I'm just going to proceed, and I'm going to tell you, tell everyone that's Jeff Allen, and the way I present Jeff Allen is he is our team member who is a portfolio manager, and this is the first time in my 30 plus years of doing investments that I've actually had a portfolio manager in house. So as opposed to, and we still have access and we still have relationships with institutional money managers from A to Z. I mean, virtually all the money managers are out there. We have relationships through our broker dealer with all of them. And Jeff works with us in conjunction with us and has created his own custom portfolios and has performed very, very well compared with the rest of the market. His experience is 25 years plus and comes from a strong line of financial students going back to Charles Dow. So he's very strong in his philosophy. He's very stable as opposed to somebody like myself who's very emotional when I see market movement. So the last person that you want with their finger on the throttle or the brake pedal is me. So we want somebody who's cool-headed, who knows how to make money in every market, and especially including the middle market. Middle of the market is where you make money. By the way, if anybody's on the call and you have not muted your mic, please mute your mic so that we can minimize extraneous noise. So here's some headlines. The market was due a rally. Why the crisis isn't over yet? The market was due a rally. Italy is still in trouble, and you're probably familiar with some of the financial problems that Italy has had with its national economy. The U.S. consumer is still broke. How often can you read that headline and agree? the U.S. consumer is not only broke, but continues to make more money. That's fascinating to me. The U.S. consumer continues to make more money and continues to go deeper in debt. Millions of people are out of work. Sound familiar? A month ago, the unemployment rate in the city of Detroit was roughly 24%, and Las Vegas was the #1 unemployment leader in the country at 33%. More recently, we have gotten our unemployment rate down below 30%, which is really, really cool. Our unemployment rate in Las Vegas, Nevada is 29%, which means that there are still hundreds of thousands of people working in the hotels, in the casinos, as well as outside the hotels and casinos. It's a known fact that about a third of Las Vegas employment has to do with hotel, which means, on the optimistic side, that 2/3 of the economy does not have to do directly with the casino hotel. The economic outlook is gloomy. So I'm looking at oh my goodness, most of you have your cameras turned off. What's the deal here? So I'm looking at the people that I can see. So nod your head if you agree with the fact that the economic outlook is gloomy. Does it seem compatible with today's news? Well, I pulled the wool over your eyes just a tad bit, because those headlines were not last week's headlines. They weren't last month's headlines. They weren't last year's headlines. They were actually headlines from November 29th, 2011. And I'm one of those pack rats that keeps a lot of things. I keep books. I actually keep some headlines that mean something to me. I keep old Time and Newsweek magazines with nationally recognizable people on them, like Jimmy Carter or Andre Agassi or Ronald Reagan. But those were headlines from 9 years ago. But what about today? I took a look at the newspapers this morning, and one of the top headlines I see in the Nevada section of the newspapers, Nevada is getting tens of millions of dollars in federal aid. Now, we'll talk about that a little bit. It's worth talking about. And I have plenty of friends, family, and others who would look at this and say, well, this is good. Nevada is getting a shot in the arm. On the other hand, think about the issue of entitlement. Think about where the money comes from. So all money that goes to government comes from us, the consumer and the taxpayer, the private citizen. So if we're paying federal income taxes, it goes into the federal treasury, and then when it deems it necessary, the federal government sends a trickle back to Nevada so that it could take care of whatever needs it has. For example, the federal government sends us probably hundreds of millions of dollars so that we could build roads, so that we could build the Hoover Dam, so that we could support and enhance infrastructure. It's not all federal money. A lot of it's state money. But when you read something like this, you have to realize that money is coming out of our pocket, right? All prices come out of the consumer's pocket. All hourly wages come out of the consumer's pocket. Here's another one. Gross domestic product contraction likely to get worse. Obviously, there was a contraction in the first half of 2020. They're looking for a very, very modest growth rate of maybe 5% in the second half of the year. And I'm sure that Jeff would have a more informed opinion than I would. That's why he's on our team. But you know what happens when the whole country stops working for 3 months? You have a contraction. And I wanted to add some humor and some balance to these headlines. These are all today's headlines in today's Las Vegas Review-Journal. Roger Goodell, the commissioner, the $50 million man, I believe the last time I checked, he was making $50 million a year to run the NFL on behalf of the owners. He says that a full season is planned. So what that tells me is that human nature being what it is, we are not going to give up our sports. We're not going to give up our entertainment. We're not going to give up living our life. We're not going to give up catching catfish in the morning and having a fish fry at night just because the city is burning all around us, right? I'm kidding. It's not burning all around us. But the point is, America and Americans want to continue to move on. And we're going to do everything in our power and our influence to make sure that we have the things that we're used to having. Now, I bring this question up, and many of you have heard me ask this question ad nauseum. What keeps you up at night? The reason I bring it up again is I was on a meeting with a church board yesterday that I serve on. And some of the leaders were alluding to questions that bother people as citizens, questions that bother people in the local community, questions that are bothering people, because whatever happens in the world affects us emotionally, affects us materially, biologically, psychologically, socially. It affects us financially and spiritually. So this is a question that everyone is asking. I happen to also see a headline that I think came through Facebook by some other financial author. And he was bringing the same question up. And he said, I've been thinking about what keeps people up at night. And I'm saying, we've been talking about this question for what, 10 years, Yvonne? I mean, and do you know why we bring it up? Because everything is pretty much the same from decade to decade. I showed you headlines going back 9 years, because there really isn't that much happening that's different and new from one decade to another. Now, the name of the pandemic changes, the name of the germ, the name of the disease, the thing that hurts people, the thing that causes a body count. In the late 60s up until 1972, I think, we saw a daily body count for the Vietnam War, for those of you who are old enough to remember that, or those of you who have read history books. And I think we covered 58,000, right? And it was the worst thing that ever happened to us. Well, it was the worst thing that happened to us in the 60s. And if you sat down and maybe cheated a little bit and pulled out your encyclopedia or looked up some Google data, you'd say, let me write down the 100 worst things that have happened to this country. And you wouldn't have to go back very far to think of bad things that have happened. Shootings, riots, fires, earthquakes, hurricanes, tornadoes, power outages. I mean, there was a New York blackout when I was about 10. And I guess it was one of the worst things that ever happened in 1962. But what does this tell us? We're going to keep on having good things happen to us as an individual, as a city, as a family, as a nation. And we're going to continue to have bad things happen to us. And Nelson Nash challenged us with this one word, among many other great words and truths and wisdom that he shared with us. But it behooves us that we need to think as to how we're going to respond to what happens to us. And it occurs to me that number one, Americans have a very short memory. And although repetition is the mother of learning, it's also true that we learn very little from history. And you would think, from watching all the things that have happened in our nation, that we would develop somewhat of a philosophical approach to life and say, you know what? Some people are going to die this year from being mugged. Some people are going to die walking across the street and getting hit by a car. Some people are going to die from overdosing on something accidentally or intentionally. Some people are going to die because they broke the law. Some people are going to die because they smoked. I've had several family members die from lung cancer, and several very close friends and clients who have died from lung cancer. And when I can, when I'm given permission to, I'll share with people that, the smoking is not good for you. And by the way, on top of it not being good for you, it's kind of an ugly death. But people don't really want to hear that, do they? I'm going to take a breath, and anybody who wants to jump in, please don't worry about speaking over me, because if I hear you, wanting to jump in and raise a point, take issue with what I say, ask a question, I'm happy to welcome you to the stage. This has come up in the last few days, and this is provided by the Federal Reserve. And I've been listening to millennials express their opinions about money, and I'm learning a lot of interesting things about millennials because I work with quite a few of them in different cities that we work in. And I know they have a different view towards money than boomers, people like me, have. In some sense, they're more conservative in that they actually have more money in the bank in safe savings than their elders have had. They're more cautious. They want more information. They will investigate any opportunity online until to the point of exhaustion. But look at this chart. If you can see, it's a little bit fuzzy. But if you look at the silent generation, those that are older, those who were born prior to 1946, the silent generation, their resources clearly are going down, diminishing, reducing, because they're spending their wealth to live. It kind of makes sense that their share of the national wealth would be diminishing. And maybe there are other components that go into this, but we know that the silent generation at the higher end is partly dying off. So they're going to be either spending down their assets or transferring their assets to the next generation. And then we have the boomers, those of my generation, born between 1946 and 1964. And it appears that our share of national wealth is slightly increasing. And the point at which we were about 40-ish, you see a crossover point between the silent generation's wealth going down and boomers' wealth share going up was about 2005, about 15 years ago. And I noticed that our share of the wealth continues to at least maintain and maybe creep up slightly. And then you look at Generation X, which is the generation immediately after me, those born in 1964 to about 1980. That's continuing to remain very low, and it's about 8% as of now. But when they were back about 15 years ago, you can see that their share of national wealth hasn't increased that much. And then it actually takes a second to locate the millennials' share of net wealth, which is hovering around zero. Obviously, it was very close to zero when they were first born. They wouldn't have a share of wealth. But you see what happens today when they're approaching 40, their share of net wealth is about 3%. Now, you could talk about the reasons for that. Number one reason I hear is that money is not important to younger people. But there may be some things that are happening behind the scenes that are causing younger people to care less about building wealth, to care less about giving to causes, to care less about contributing to their legacy, and their generations that are coming up after them. So those are all things that I think about and talk with people about, because I want to know what they're thinking. I want to know how they're responding to current events. I want to know what their thoughts and dreams are about what to do with wealth when they come into it, and whether they have any desire whatsoever. And Nelson said, you know, if you know what's happening, you'll know what to do. Now that seems like it's a kind of a superficial type statement, but unless you see what's going on around you, in the nation, in your company, in your city, in your family, in your church, in your social groups, you won't know what everybody else is doing. And one of the many truths that I was taught that I totally believe in is, I want to watch what everybody else is doing, because I want to make sure that I'm doing the opposite. So right here in this inconvenient truth line, you see that it's easy to get into the inconvenient truth line because nobody's in line. And that's part of the problem. Nobody's in line because they're waiting for everybody else to take the first step. Well, you know, I don't really want to start saving any money because none of my friends are doing it. You know, we're all out of college now, and we have these great big college loans. And so it's not really time to start saving money yet until we can get some breathing room and get ourselves a little bit above water. Well, you know, I'm 30-ish now, and I'm raising a family, and I'm just in an entry-level job, so it's not really a good time to start saving. Well, you know, the kids are 5 years old now, and I'm starting to put them into a charter kindergarten or charter school or a special needs school or soccer, and it's not really time for me to start saving money. Well, you know, the kids are in high school, and I have them in a private high school, and I also have them taking violin lessons or soccer lessons or music lessons or ballet lessons or whatever it is, and we don't really have time to start saving money. Well, you know, the kids are going to be starting college in a year or two, and I really have to start socking money into books and tuition and flying the kids around the country to interview colleges. And I just can't see when it's going to be time for me to start saving money. Well, you know, I'm 50 years old, and I'm actually in kind of a middle manager type role in my company. And, you know, I haven't really started making the big bucks yet, but I am putting 2% into my 401k. Does any of this sound familiar to you guys? And one of the greatest things I can do as a financial advisor is remind people of what the majority's doing, so that they can make sure that they do the exact opposite. Because the last thing that you want to do is spend any time in that reassuring lie line. You know, get a good job, stay in it for 40 years, max out your 401k, make sure you pay your house off before retirement, send extra payments to your mortgage company to pay your mortgage off. If you have a 30-year mortgage, maybe you can pay it off in 22 years or 25 years. And you know, a really good idea is a 15-year loan. Well, my question is, have you done the math? Has anybody done the math? If any of you advisors on the call here are listening, when you speak with a mortgage professional, ask them if they've done the math on a 15-year loan. So where that leads me to is what Nelson had been preaching to us for the 20 years that we worked with him. And that is build the 10%. Build the 10%. 10% of our country is over 30 million people. And I can't really afford to take the time to try to convince people who have no interest. I can't afford to take the time to convince people who are the middle managers or less, who are entry-level jobs and who continue to make excuses for 20, 30, 40, 50 years as to why they can't save. I have to work with the 10% or even fewer. Now, we've been working on building the 10% for 20 years. And I'm not even sure that we've reached 1 million people. And I'm not even talking about myself or Alpha Mega or Unbridled Wealth in Denver or Practical Wealth in Philadelphia, all sister companies, or Generational Wealth in Austin. I'm not even talking about the larger culture of infinite banking practitioners, and there might be a couple of hundred of us in the country, might be a couple of hundred. I'm saying that the IBC community probably hasn't reached 1 million people. And what that means is, from the time I got in the insurance and investment and finance business 44 years ago, people's savings habits haven't changed that much. Their ideas on protection haven't changed that much. Everybody would like to leave $1 million or $5 or $10 or $20 million to their posterity, but nobody wants to pay for it. Now I'm repeating some of these truths that we've talked about before, because first of all, they're worth repeating. And if you haven't memorized them, not only memorize them, but learned how to actually execute. For example, the second item here, take over the banking function in your life. Well, what does that mean? Why would I want to take over the banking function in my life? Well, I'll tell you, Evie and I have a personal banker with Nevada State Bank. We get personal attention. If we have a check that we think may not clear, it's a deposit from one of the companies that pays us, and it's a larger check, typically a bank is going to hold that check. Our checks don't get held. We have a very comfortable, very close and professional relationship with our personal banker. You absolutely need a personal banker with a commercial bank to manage your checking account. I'm not talking about that. I'm taking over watching what banks do and learning how you can apply what banks do to your life. In order to be part of the 10%, you've got to study economics. You've got to know the difference between what the majority is doing and what rich people are doing. Nelson would turn over in his grave if he found out that any of us on this call were doing business with banks. I'm gonna switch over here for a second. Let me see. I'm assuming that since you can see my screen, you can see what I've written in with my hand. Yvonne, yes? Elements of banking. Okay. Anybody have any questions so far? I'm looking at the names here. Questions, comments, water break. The elements of banking. I've been thinking about the elements of banking. You know what? I think about the elements of banking every day, because one of the most important things I can do is simplify our conversation to clients. So if you think about the whole banking structure, the whole banking environment that we have to deal with every single day, because literally 1/2 of every financial transaction that happens on the planet has some participation from a bank. And I know that some of us were on the call yesterday talking about this, but the elements of banking are simple: A, B, and C. They're deposits, loans, and a banking system. And we're not going to beat this to death too much. And everybody knows that depending on your ability to qualify, depending on the kind of loan you're getting for a house, depending on the size of the loan, depending on what you do for a living, and whether your income is good, whether your FICO score is excellent or just medium, your house mortgage is going to be somewhere 4% or greater. Back in the day when Evie and I had no credit and didn't have much of anything to speak of, we had to get a 9.9% mortgage. Well, you know, thank God we were able to dig ourselves out of that hole. But let's say that banks or mortgage companies, lenders, are charging 4% for a mortgage. Let's say they're charging 6% for a car loan. Let's say they're charging 8% for a business line of credit. And I know that they vary and fluctuate. Short-term loans might be 10 or 12%. Credit cards might be 18%, which is close to the national average. So what's happening here is banks are charging us these numbers in order to lend us money. Now, I'm just getting to a very simple and basic ratio here. So if the bank borrows our money, which is what it's doing when we deposit, if the bank borrows our money at 0.1%, think about that. We're making a deposit to a savings account. We're putting money in checking account and getting zero interest on it. In fact, many checking accounts are actually charging for the money to have use of your money overnight. And if the bank lends it out at, let's just put some number in here, 7%, they're lending some money out at lower rates, they're sending some money out at higher rates, then we're talking about 70x. 70 times 0.1 is 7%. They're borrowing our money because they're paying us 1.1% on savings. They're lending money to us at 7%. That's 70x. So the bank's rate of return is 700%. Now, we're looking at banks, we consumers, we ordinary citizens look at banks and say, well, you know, banks are boring because I put my money in the bank, and not only do they not pay me anything, they're actually charging me for my checking account. They're charging me for checks. Over the last several months, we've been flirting with negative rates, meaning the banks would actually charge us to leave our money there. So it might be better off if we just put the money under the mattress. So if the bank customer is making 0.1% and the bank owner is making 700%, what do you think your conclusion should focus on and think about? This is why I put that big, very simple, bold word up on the screen a few minutes ago. It's all about how you think. Now, a lot of people are going to say, well, I don't have the interest. I don't have the time. I don't have the energy. I wouldn't have the focus or the energy at the end of the day to read a book on becoming my own banker. Even if I could multiply my returns by, 100 times. Well, 100 times would be 10%, wouldn't it? So this is the reason why my goal in life is to build the 10%. My goal is to talk to people who are looking, who are hungry for something different. So let me go back to my screen here. So you could be a bank customer or you could be an owner. And for me, what's happened over the last 4 months with coronavirus coming out, with layoffs, with furloughs, with unemployment, with PPP loans, with EIDL loans, with folks actually making more money staying home and not working than they were making while they were employed. You know that this is a very bad psychological move for most people, because when most people can be content to sit at home and collect an unemployment check, where is the initiative? Where is the drive? Where is the passion to go out and create something? It's non-existent. I'm going to open up. I might even give you 10 minutes back of your life if we close a minute early. Why don't you open up your mics and give me any reaction you have whatsoever to anything that we talked about?
I really like that simplified way you have, Joe, of showing, what you're earning in the bank versus what they're paying you. It's quick and it's awesome. I love it.
Thanks. Our clients are probably as busy in their lives and as driven in their lives to create their business, to become excellent in their profession, to be the best doctor they could be, the best real estate salesperson they could be, the best entrepreneur that they could be. They're busy doing that. Now, the reason our model's different is because I don't want to become your advisor so that you could just give me all your money, let me manage it, and I'll let you know how you did at the end of the day, end of the year, end of the decade. We've endeavored to take the more difficult road, and that is to encourage and cajole and plead with our clients to gain education, right? Get wisdom, and with all thy getting, get understanding. That was a proverb that I read in Forbes magazine in the 60s. Because Malcolm Forbes, on the inside cover of Forbes magazine, would always include a Bible verse of some kind. It was usually from Proverbs. Usually had to do with wisdom. And how are we going to encourage our clients to teach their children about finance, about economics, about wealth, about money, if our clients won't take the time to read a book? Now, reading the book is only the first step. Now you have to apply it. Now you have to think about your situation. You have to think about how it applies to you. You have to think about all the money that's flowed through your hands. And I know that's an uncomfortable exercise for all of us, including me, because I have a pretty good idea of how many millions of dollars have flowed through my hands and seeped through my fingers over the years and decades. And it's no different with 99.99% of Americans. We're still saving about 4% if we're lucky, and half of Americans aren't even saving that. So we have a challenge ahead of us. $1.5 trillion worth of student loan debt. Now they want to make college free. Maybe we'll just continue to have a basic living income for every American. Well, I can't imagine what that could possibly be to satisfy even the most minimal and modest of standards. What are they going to pay you? $1,000 a month? $3,000 a month? And what is that going to do in terms of taking away your freedom and your initiative? It's not about the money. The money is the means to an end. But what I want to do is I want to teach my kids and grandkids why they want to be at the top of the food chain financially, so that they could give more, so they could create more, so they can lend a helping hand out more, so they can do more good. The purpose of capital is to do good. And the more capital you have, the more good you can do. That's the only reason for capital. At the end of the day, it's the only reason. Listen, if you own 20 McDonald's or 20 Krispy Kremes or 20 of any other kind of a money-making chain store, at the end of the day, once you have all the clothes that you could possibly wear, all the cars you could possibly drive, all the vacations you could possibly go on, what do you do with the excess? Well, my goal is to have excess, is to create excess so that I could give it away intelligently to the causes, to the nonprofits, to the charities, to the individuals that are doing the work that needs to be done to build up people. At the end of the day, that's the way I think. My method isn't perfect. It's not executed perfectly. That's why repetition is the mother of learning. You can't get good at this as a practitioner, as an advisor, or as a client, customer, investor, unless you practice, 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 and read, read, read. I enjoyed being with you this morning. I hope that you'll follow up with me and ask questions. Hope that you'll follow up with me and bring people to the table who have questions. I hope you'll order cases and cases of Nelson Nash's book so you could get this wisdom into people's hands. Because in my mind, there are very few things that I could think of that will save people financially, that'll give people hope for a future, that'll let people see the silver lining, that'll help people see the possibility of a way out of the financial doldrums that they're in, the financial rut that they're in. Listen, we've all made our bed, we have to lie in it. I get all that, but there have to be some solutions. We can't just have a nation full of people with problems. We have to have some folks who will rise up and say, listen, I found a solution and I've practiced it in my own life and I've proved that it works in my own life. I'm one of those people. I'd like you to become one of those people, and I'd like you to do it for yourself, for your kids, for your family, for your future, for your employees, for your companies, for your causes. However that works out, I want to help you do more good. So keep in touch. Have a great weekend, and look forward to speaking to you next week. Actually, hold on. Next week, we will not meet because next week is July 3rd. And that is, we recognize July 3rd as a holiday for the 4th of July, Independence Day. So we will skip next Friday and meet again. Yvonne, is that correct? In 2 weeks,
Correct.
2 weeks from today. So
Yes.
that would be July 10th will be our next meeting. Thank you.
Thank you.
Thanks, Joe.
Thanks.
Thank you, Joe.
Bye.
Bye.